Hey everyone, Tesla is scheduled to report quarterly financial results after the markets close on Tuesday, July 23rd. And given the recent surge in Tesla's stock price, a lot of investors are interested and they're asking, should they buy Tesla stock before it announces earnings or after it announces earnings? Or should they buy Tesla stock at all? I'll address those questions in this video. I'll also preview what investors should look for from Tesla coming out of this quarterly financial statement. There's some big question marks investors are hoping Elon Musk answers in this upcoming earnings release, and I'll highlight what those big question marks are. So let's take a look.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
All right, so one of the big question marks investors will be looking for from Tesla is total automotive revenues. How much will they decline? In the latest quarter, total automotive revenues were down 13% year over year to 17.378 billion. Now, it wasn't that long ago when Tesla was telling investors it was going to grow its car sales and production by 50% per year. And so in a relatively short amount of time, not only is Tesla not growing at 50%, but its automotive revenues are in decline. 2 quarters already of decline in total automotive revenue. When the company gave its quarterly production and delivery numbers on July 2nd, it noted that it delivered 443,956 vehicles in the second quarter. Now, when they report automotive revenues, that's likely to show a year-over-year decline again, because that was a lower delivery number, roughly 5% lower than in the same quarter the prior year. And also, they've been lowering prices, so it's likely coming at a lower average selling price. So you have both lower deliveries and lower average selling prices. So, unsurprisingly, that's causing a decrease in total revenues, which are down 9%, which leads me to the next thing that investors should look for from Tesla, which is the other parts of the business: energy generation and storage, and services and other revenue, which were the bright spot in the latest quarterly update, growing 7% and 25% respectively. Now, these two combined are still a relatively small part of Tesla's overall business. You'll notice here when you add the two together, it's about 3.9 billion in revenue for combined energy and services and storage. And that's still less than 1/4 of the more than 17 billion in automotive revenue it generated in the most recent quarter. But when you consider the trend with automotive revenue in decline and these other segments rising, it wouldn't be surprising to see these two segments grow to become a larger part of Tesla's business. Now, I've seen Tesla lose significant market share in electric vehicles, and I suspect that will continue for the rest of this year as competition ramps up different models, lowering prices, and the growth in the Chinese EV companies especially are really hurting Tesla in that region. And then in the US, it's just so many new models coming out that Tesla was inevitably going to lose its market share. It's now down to 50% in the US. That's down from over 80% market share, and it's only going lower from there. So Tesla's other parts of the business are really more important now, and that's why you've seen the CEO talk more about artificial intelligence and play down the impacts of electric vehicles, because the CEO understands smartly that electric vehicles, it's not going to do very well for Tesla, at least in the near term. Now, another thing for investors to look out for is the gross profit margin. That's one of the things I have been commending Tesla for, is that they have an incredibly good gross profit margin based on the fact that every other EV company is doing so poorly in terms of profitability. Tesla's been able to do a great job with their profit margin, but it's heading in the wrong direction now. You've seen 1, 2, 3, 4 straight quarters of declining total gross profit margin, and I wouldn't be surprised if in the upcoming release this quarterly profit margin decreases even more as a result of lower average selling prices and the ramp up of the Cybertruck, which is yet to be profitable because of the smaller scale. I fully expect it to be profitable longer term when it ramps up to full scale, but for now it's bringing down gross profit margin, which in combination, you have lower revenue, you have lower gross profit margin. Of course, you're going to have lower profitability on the bottom line. Income from operations was down by 56% in the latest quarter to 1.171 billion. Still, Tesla, out of all the EV companies, the best in class in terms of profitability and the best in class in terms of gross profit margin. Other big areas of focus are the cash flow from operations, which was down 90% year over year to just 242 million, and free cash flow, which was negative 2.5 billion, which was down 674%. I know there's been a lot of talk about Tesla investing in artificial intelligence to develop driverless car technology, and that's really what's been driving Tesla's stock price. But you've got to look at how the company will achieve that. And that's going to come at very high capital investment. And you notice that in the latest quarter, cash flow from operations dropped all the way negative 2.5 billion compared to the same quarter the prior year where it was 441 million. And it had 4 straight quarters of positive free cash flow. But because of declining revenue, declining profit, declining cash flow, coupled with increasing investment, it's all working to really bring Tesla into negative financial positioning. But that could pay off longer term if the company does develop that AI technology for driverless cars. It remains to be seen just how much revenue and profit it will earn if or when it develops that driverless car technology. I know there's a lot of enthusiasm surrounding that, and Cathiewood has made some projections. If you haven't seen my video about those projections, I'll link to it at the end of this one, where she's expecting some wild revenue figures from Tesla, astronomical revenue figures from Tesla, unrealistic in my opinion, but Cathiewood has always been overestimating the potential for Tesla. Going back several years, she's been one of the more bullish Tesla stock enthusiasts longer term. All right, a few more things to look out for from Tesla's quarterly earnings update. The company has been reducing average selling prices, offering promotions, discounts, etc. I want to hear more from Elon Musk about this strategy. Are they going to continue this race to the bottom, just continue lowering prices to try and eliminate competition, which is already showing some benefits, right? You've seen some EV companies go out of business, Fisker being one of the latest ones to struggle and just, have to leave because of difficulties. And if Tesla continues bringing pressure into the industry by lowering prices, that could cause some of the weaker players to leave the industry, which ultimately will be beneficial for Tesla longer term. So will it continue this strategy of short-term pain for potential long-term gain? I want to hear more about that. And then I want to see continued cost decreases, lower cost per vehicle, lower freight cost, lower raw material cost. That trend has been working in its favor. I want to see if it continued in the latest quarter. 2 big items in addition to this that Tesla stock investors will be very curious about, and that is its lower priced model. Tesla has hinted that by the end of this year or maybe the beginning of next year, it will introduce a lower priced model. Now, it's unlikely to be the $25,000 model it has long promised, but it could still be a lower priced model, maybe $30,000, maybe $32,000. Anything in that range would be a catalyst that could return Tesla's automotive business to growth. Otherwise, I don't see the catalyst to boost its EV sales. I see it continuing to decline because of rising competition unless it comes out with that new model that entices consumers to buy more of these electric vehicles. And then, of course, the announcement regarding the robo-taxi. It was initially scheduled for August 8th, and rumors suggest that it's now pushed back to October. Investors are going to want to hear more about that. More details. What are you actually going to announce in that event? What are we going to see from Tesla in that event? So there's going to be a lot of questions, and there's going to need to be some more details from Tesla and Elon Musk in that regard. All right, and then to answer the question, should you buy Tesla stock before or after earnings? Well, if you look at Tesla's valuation, it's trading at a forward price to earnings of 72.6, which in my opinion is overvalued. I've felt Tesla stock has been overvalued for some time now, and I've suggested investors not buy this stock. So certainly I wouldn't recommend buying Tesla stock before the earnings announcement. Whether or not Tesla stock becomes a buy after the earnings announcement, I'm unable to say at this moment. I need to digest the quarterly earnings release, look at the information, look at how the stock price reacts, and then make an assessment after I do that, after earnings. But going into earnings, I feel the stock is overvalued. And so I would say, to answer the question, I would say no, I don't think the stock is a buy before earnings. Thank you for watching this video. I truly appreciate it. I know there's a lot you could be doing with your time and a lot of other videos you could be watching. So I truly appreciate that you chose to watch this one. If you want to see more videos just like this, hit the subscribe or the like button. They'll both help me make more videos just like this one. Thank you again.